Good morning, traders. It's the 26th of May. I'm Joe from Signal Centre. Hope you're all having a great morning so far. Okay, going to get straight into it. We've got the latest headlines, and we're going to get into some charts. As always, if there are requests, post them up, and we'll do our best to cover them. It's the last trading day of the week for most of us, unless you're a cryptocurrency enthusiast, of course, then you've got another 2 days of action. It's a bank holiday in the US and the UK on Monday as well, so there'll be no show then. So let's wrap this one up. And hopefully it's been a good one for all of you that are watching. So headlines: US jobless claims came in lower than expected yesterday. They edged higher edged higher to 229,000 in the latest week from 225 previously, but well below the consensus forecast of 250,000. Continuing claims also declined slightly from 1.79 million from 1.8 million previously. In terms of the Fed speakers, we had a little bit of action yesterday there. Fed Governor Collins stated that a pause on rate action would give the Federal Reserve time to measure the impact. She added that the inflation level is currently too high, but sees promising signs of moderation. But the market at the moment expects a hike in July. Futures markets indicated a 45% chance that rates would be increased again in June, with close to a 70% chance that rates would be increased by July. The dollar edged back from a fresh 2-month high yesterday, posted further gains in the morning, with the currency index hitting a fresh 2-month high, but there was a limited correction overnight suggesting, or reports suggesting that the Chinese state banks were seeing selling dollars to support the yuan. UK retail sales saw an increase of 0.5% for April compared with expectations of a 0.5%. So they were pretty much in line, and added that it was a year-on-year decline of 3%. And the debt ceiling talks continue as well. House Speaker McCarthy stated that there had not been a deal to raise the debt ceiling. Negotiations will continue, with a deal needed over the weekend to give enough time to secure a deal before the June 1st deadline. And there is a bank holiday, as mentioned, on Monday. We've got US PCE prices data today. That will be released around 1:30. That'll be another read on inflation, and again, another data point that will be considered by the Federal Reserve when it comes to plotting what to do next with interest rates. Consensus forecast on the PCE data are for a headline increase of 0.4%, with the annual increase slowing to 3.9% from 4.2%. So we'll wait and see how that comes out a little later. A couple of requests already coming in for markets. We'll be taking a look at CAD yen and New Zealand dollar yen, as well as some of the majors. Prior to doing that, let's take a look at cryptocurrency and see how that's shaping up moving into the weekend. So again, just to recap on how we're looking at things from the weekly time frame. We know there's been a pretty decent rally in Bitcoin of late, but if we look at the weekly chart here, over the long term, we can see that there's a very nice uptrend in place, but that was broken back here in June time 22. We then saw this period of consolidation or a correction lower. The move to the upside has rallied into the neckline of this large double top pattern. So that is a bit of a concern. It's also at the reverse side of this major trend line as well. So that is something to consider for the long-term picture here on Bitcoin. Taking a look at the daily, just to refresh your memories here, we are suggesting that a head and shoulders top pattern has formed here. We saw the breakdown through the neckline on the 11th of May. Subsequent retests of the neckline have failed, and that is acting as a resistance level. On Wednesday, we saw a pretty chunky move to the downside. Yesterday, we attempted to recover some of those losses, but we did print fresh losses on the day, testing this previous swing low from the 12th of May. Bit undecided today. Let's see how that runs into the weekend, but seems as though there is a bearish bias here, given that we've got that major setup on the weekly and also this head and shoulders top pattern on the daily chart. Okay, I'm going to leave it there for crypto. It's going to move straight on to commodities. A bit of a shrunken episode because obviously I haven't got Steve to help me with all these markets. But if there are any specific requests on cryptos, feel free to let me know and I'll come back to it. Okay, so let's take a look at oil. Let's start here. So as mentioned yesterday, Seems as though we're trading in a bearish channel over the long term. If we look at yesterday's price action, it was pretty bearish. We've rallied into resistance at 78.04, and yesterday posted a bearish engulfing candle, engulfing all of the previous day's gains as we approach that resistance level. So further confirmation that we do have resistance there, and still looking pretty negative overall. Bit of a bounce back today. For me, I'd suggest that gains today may be limited to around $77 on Brent oil. And preferred to be looking to sell into rallies. I'm assuming similar situation with crude. Again, rallied into resistance here around 74.45, and again posting that bearish engulfing candle, which is negative for the short-term price action. Let's take a look at silver and gold. Silver fell through the 50% Fibonacci level yesterday, with a pretty nasty looking red candle, but it's been a pretty strong bounce back today. Given that we've seen a bit of weakness in the dollar index and almost attempting to engulf yesterday's losses. Obviously, there's a long way to go on the session, so we can't get too excited about that yet. But if we do close out today's price action with an engulfing candle, then that could be pretty bullish for the short term and suggests we may get a corrective bounce to the upside. Next level of resistance up there is at 24.47, so it'll be a nice move indeed to potentially capitalize on, but I think we need a little bit further confirmation on that before we can get too excited. Looking at gold, so drew this sort of crude pattern on here yesterday, suggesting there's a bit of a rounded top formation that's occurred on the daily chart. If we scroll back to the left hand side, we can see previous resistance from back here in March 22. Prices rallied into that level, looked as though they were going to attempt to break through, but then ultimately failed, and that's triggered further selling and potentially completing a bit of a top pattern here, potentially a double top. And we are now looking for lower prices. So yesterday we broke through the swing lows from the 18th of May, and at the moment we're seeing a bit of a retest of that newly formed resistance at 1952. So that looks maybe quite interesting today for a short-term trade on the gun to the head challenge. So I will mark that one and come back to it in a little while. But overall, for me, looking a bit bearish there, and obviously we know dollar index has been pretty strong of late. Let's finish off with natural gas, see what's happening here. My charts are a bit of a mess because I haven't looked at this for a while, as generally Steve covers it. But prices do appear to be flattening off a little bit, consolidating in the short term. We've got a clear line of support there around 2.1. In recent sessions, we saw a decent move to the upside. Then we posted this shooting star candle, and prices have declined. Yesterday, we posted a bearish engulfing candle. It's actually a bearish outside day. So prices made new highs on the session above the highs of the previous day, but then closed towards the lows of the session, which is pretty negative for short-term sentiment. So it looks as though we may see more sideways and choppy price action as we continue to try and consolidate here on natural gas. Okay, let's move on to currencies now, and starting off as always with the dollar index, just to try and set the tone of what's happening in the currency space. So we talked about this 61.8% fib level at 103.98 or 95 being a potential level to watch yesterday. It's only a short-term one from these highs that we posted in March down to these lows that we posted in April, and highlighted that it may act as a resistance level. It wasn't to be the case. We pushed through that quite convincingly yesterday and rallied into resistance here at 104.22, which appeared to stall the price in the short term. So a little bit of weakness today. I wouldn't get too worried about that just yet, because overall it does look pretty strong indeed. But let me just clear up these fib levels lower down because they're not as relevant anymore. Above that, we're looking for a move to potentially test a 78.6% fib level at 104.80. Also, let's talk about this potential for a double bottom. Is only potential. It's still got a lot of work to do, but if we can get above this 105.88 level, then it will confirm a double bottom pattern, and the projected move as a result of that pattern completion would be all the way up here at 110.95. So something to keep an eye on. Ultimately, though, it does look as though we're bottoming out potentially here on the dollar index, and we may see a revival of the uptrend, but still some work to do. We can also take a look at this trend line here and see if there's anything shaping up. I mean, ultimately, we want 3 touch points on that, so we may have to cut through a bit of price action to get that. But arguably, we're kind of into that downtrend resistance level now. So interesting level for the dollar index, but for me, I think it still looks quite bullish, and therefore that's going to set the tone on a number of other currencies. Let's take a look at euro dollar. So yesterday that broke through the 61.8% fib level as well. That was at 107.37, and we are struggling to overcome that today. So following the break yesterday on the close below it, we have seen an attempt to try and break back through it following the close lower, and so far we are struggling. It's up ever so slightly on the day, but as we can see here, the short-term bias is negative following the break of this bullish channel, and therefore we can potentially look for lower prices. We've got a level highlighted here at 106.40, which is a short-term 78.6% fib level. Then we've got this major area of support down here between 105.00 to 105.31. So that's going to be quite a key level there for the euro dollar pair. Again, if we break down through that, then we are completing a fairly large double top, which may indicate much lower prices over the medium term. But still, again, some work to do. We haven't confirmed it, and therefore we can't rely on that as a pattern at the minute, only on a speculative basis. Let's take a look at cable, sterling US dollar. So we broke down through support yesterday at 123.44, again potentially forming some sort of rounding top here. We had this major resistance at 126.66. We can see that's the level we got to previously in May, so it's a fairly significant resistance level. We've also seen a break of trend, so that's kind of setting the tone in the short to medium term, suggesting that we may see further declines here. The 38.2% fib level of this entire move comes all the way down here at 117.92. So following the breakdown through support yesterday, it may eventually trigger a further correction down towards these levels. Obviously, we don't expect it to happen in a straight line unless there are some particular events that will impact that. Obviously, debt ceiling, but largely assumed, I think, that we will get that sorted prior to the 1st of June. So I'm not sure how much impact that will actually have. But overall, it looks as though this is struggling, and the dollar index is in the ascendancy here, and obviously playing a key role in this particular market. Let's take a look at dollar yen just to wrap up some of the majors. In fact, I may look at the currencies, commodity currencies too. Broken through resistance here at 137.91. That blue line that we had there acted as support on a pullback and has continued to move higher, closing through a 50% Fibonacci level yesterday. Seen a bit of a pullback into that level today, and buyers seem to have stepped in, although it is slightly lower on the day. So that's looking pretty strong as well. Next level up is the 61.8% fib level at 142.50, and it's looking pretty good to get up there, I think, given that we're seeing this continued strength in the US dollar. Let's take a look at the commodity currencies. I looked at Aussie US dollar yesterday as my gun to the head trade because the pair broke down through this range, which wasn't a particularly good indicator for a long trade, but we did have some support here, which was highlighted here by this blue band, because it was the neckline of a previous inverse head and shoulders and also a 61.8% fib level. But that didn't work yesterday. We closed through those levels quite convincingly. So very bearish actually for this particular market. We've seen a bit of a rally back today, but ultimately it looks as though this is going to be a case of selling into strength. So my suggestion would be that a move to 65.67 is likely to provide resistance, and I would be preferring to sell into rallies towards that level in anticipation of a continuation lower towards 63.80. Let's take a look at New Zealand dollar versus the US dollar. Couple of nasty days here. So we were trading in a bit of a corrective channel here. We broke down through that on Wednesday. We continued to move lower yesterday, taking out this previous swing low from the 8th of March in the process. Seen a bit of a retest of that level today at 60.84, but ultimately that looks like it might just be a retest before a further decline to the downside. So this is looking pretty negative too. We do have a 50% fib level fairly close by at 60.25. But all in all, this is looking pretty bearish, and we may see further downside in the short term. Okay, so requests, got a couple coming in. They seem to be centered around yen. So let's take a look at these today. Let's take a look at euro yen to start with. So we know we saw a decent breakout to the upside long term on the daily. We can see that it's in a pretty decent uptrend. So therefore, that is going to dictate the longer term bias, which remains bullish. We saw a breakout through this range that had formed, and that occurred on the 28th of April. There's a bit of a sharp pullback here, but this looks to have just been a continuation pattern as prices broke up to the upside and have continued to grind higher. So clearly we have resistance on the upside at these swing highs that we posted at 151.61. So it looks as though that's going to continue moving to the upside. Let's take a look at the intradays and see what's happening here. So there's potential for maybe a bit of a range play to take shape, but yesterday we saw a break to the upside. Price is pretty choppy here, as you can see some quite large candles kind of just invalidating each other, and then overnight we saw a dip to the downside, but we're trying to roar back again to the upside. So maybe this is just a case of another kind of continuation pattern forming here, maybe some sort of bullish flag. So if we can get a close above that in the next hour or the next couple of hours, then that would be pretty bullish for the outlook here and suggest that we may well see a continuation higher on euro yen. So that's looking pretty strong. And as we know, looking at the daily chart, dips continue to attract buyers here. So it looks as though this is maybe just a continuation pattern here and looking pretty good for a short-term trade to the upside. Let's take a look at New Zealand dollar versus the Japanese yen. We talked about this yesterday as well. Large range here over the more medium term, dating back to sort of September last year. So price is finding support at the lower end of this range and finding resistance towards the upper end. We saw a decent move to the upside earlier in the week, but that has stalled. We've seen a pretty chunky pullback, but we can also see in the shorter term there was a bit of a range formation here. Prices broke to the upside, and now we're seeing a pullback to retest that newly formed support. So some mixed signals here, depending on kind of what time frame you want to use. But let's look at the intradays and see if there's anything shaping up here that can give us a bit of direction in the short term. So again, looks pretty choppy. We can see maybe a little bit of a top pattern formed here in the short term, maybe a bit of an head and shoulders top. So a big breakdown to take place over the last few sessions. Prices seem to be consolidating a bit now. So a bit confused with this one, to be honest, Mark. I can't really give you a steer either way. But looking at the daily, if we're going to use that to kind of dictate the bias here, then it depends which range you want to go with, really. So we've got this longer term range, but we've also got this shorter term one. The pullback into this level, if you are a buyer, you know, ideally this is maybe an interesting level to buy, assuming that you're going by this range, and we could maybe see a move to the upside. And in terms of a stop loss, probably below yesterday's low would be sufficient to go with, around 84.37. On the longer term range, then we're in the middle of that, so kind of 50% of it. So difficult to say, really. I think if you're going to trade ranges, of course, you want to be selling at the top end of the range and buying at the bottom end of the range. That's where you're going to get the best risk reward setups. Okay, let's take a look at CAD yen. So this has been quite an interesting one. We saw a big top pattern form and complete back in November. Then prices continued to move to the downside. Then we saw potentially a double bottom formation take shape. We broke through this resistance area here between 101.41 to 101.65. We've broken through that, and prices are continuing to trade above that. So we can see, again, yesterday, another example of prices pulling back, but then the buyers stepping in to take it higher. We can see all the wicks of these candles. So prices attempting to move lower, but ultimately failing. We drew this level on yesterday. This is the short-term uptrend support line, and also this previous resistance now turns support. So any pullbacks into this 101.41 to 101.65 level, for me, look like a reasonable area to consider getting long. If you're trading on an intraday basis, then we can probably see a few attempts at trying to move lower in recent sessions have ultimately ended up with opportunities to buy. So there are some shorter term support levels in there that you can maybe target, but also some resistance forming here that we need to be cognizant of. So pullbacks towards this area here represent a good opportunity to buy, ultimately expecting a break through these resistance levels at 102.91 and a continuation higher. Okay, thanks for those requests. Going to move on to indices now. Just take a look at how they're shaping up ahead of the long weekend. And of course, the debt ceiling is playing a bit of a role here as well, as to whether or not they're going to get it done. my experience is they always get it done. We've had these debt ceiling situations continue to rear their head at frequent periods throughout my career, and ultimately they get sorted. So I don't see there being any issue this time round. Let's take a look at Euro Stoxx 50 to start with on the daily time frame. So ultimately, we are trading in an uptrend. We can see here prices have been moving higher for a significant period of time, but we can see that there is potentially some resistance forming here. And if we go all the way back to the left-hand side, we can see that this is a pretty significant area dating back to November 2021. But are we forming a bit of a double top in the short term? Potentially, yes, I would say. So we've got these two top patterns, these two tops here. We've got a clear level of support here at 42.62. We've seen a couple of attempts at trying to breach that level, but ultimately that's been defended very well by the bulls. So if you're looking for speculative long trades, buying into that level at the point where we're almost going to break down, that's kind of where you can get the ultimate sort of risk reward play. Really, it is at its most riskiest because there is a chance that it may continue to break down to the downside, but also it's where if the bulls are going to come back and defend it, that's the level they're going to do it. So we can see that's happened quite nicely there, posting a bit of a hammer candle yesterday and backing that up today with further gains. So that's looking pretty good today in the short term. But let's be mindful that that 4262 level could be quite fragile, and if it does break, it may trigger some pretty sharp losses to the downside. DAX is struggling a bit today. One of the markets that's actually in the red, only by a minor amount, 5 points, which is nothing for the DAX. We know it's trading in a decent uptrend, but we also know that it's into a major level of resistance around 16,300. So we failed into that level and prices are continuing to decline. We've seen 4 consecutive days of losses on the DAX. Will today be the 5th? Possibly. We've got some swing lows here at 15,659, and that's kind of now marrying up with that uptrend line. So a pullback into that kind of region there may provide an opportunity for the bulls. Again, that may be the point at where it is defended. If it isn't, then we may see a break simultaneously of that horizontal support and also the trend line. And if that does occur, then it could trigger a pretty sharp correction to the downside, ultimately maybe down towards that 38.2% fib level. But that's kind of maybe a worst case scenario in the short term. Overall, still trading in an uptrend. Yes, we failed at that resistance level, but going by the underlying trend here, potentially still an opportunity to buy dips here on DAX. Let's take a look at FTSE to wrap up the European markets. This is struggling a bit. So we can see here potentially forming a bit of a top. We did have some support on offer at 76.89. That wasn't defended by the bulls. And yesterday we saw further losses. We're seeing a bit of a bounce back today, up by around about 23 points, 0.3%. But it's likely, I think, in the short term that we may see any rallies stall around 76.89 to maybe 77.50. And it looks as though we may see further choppy price action here, potentially lining up a move down towards these previous supports around 7,300. So yeah, looking pretty well, not too great at the moment, to be honest. And maybe that's been impacted by the strength in the US dollar. A lot of the companies that are or the big heavyweight companies that are listed on the FTSE 100 actually earn most of their revenue in US dollars. Think about the oil stocks, some of the large multinational banks like HSBC and Standard Chartered, all are impacted by the US dollar, and obviously a big mining sector as well in the FTSE 100. Let's take a look at the S&P 500, the broadest of the US markets. Got this kind of crude drawing on here that suggests that maybe we are forming a bit of a bottom on the S&P 500. It's been one of those markets that's lagged for a significant period of time. You think about those European markets, they're trading well up at their highs, but that's not the case with the S&P 500. Typically, the US markets outperform most other markets. Haven't seen that for a significant period of time now, but you've got to think at some point it will come roaring back. So we drew a couple of arrows on yesterday to suggest where the projected price action may go. In the short term, we're rallying into resistance at 4195. Potential now for a pullback towards the lower end of this uptrend line that's in place. And then that may give the bulls enough of an opportunity to accumulate fresh positions to drive prices higher, ultimately through that resistance level and complete a large bottom on the S&P 500. But for the time being, pretty choppy stuff, and not giving us enough at the minute to suggest it's going to break through, but maybe that US debt ceiling sorting out situation may push things higher. Let's take a look at the Dow, not my favorite market, just because I think it's a bit erratic and it's only got 30 stocks, so it's not generally a great indicator. It's also very high in price, which means that if you're trading it as a trader with a small account, it can be very difficult to get trades on this without risking too much. We can see here prices are pretty range bound for the time being. Ultimately, there seems to be a bit of a slant to the downside. Looking at the kind of trend and the situation here we've got of lower highs and also lower lows. So that's not looking so robust as some of the other US markets. We've broken down through a support here at 32,933 in the last couple of sessions. Bit of indecision yesterday. Ultimately, this looks like it may continue to be quite choppy and maybe grind to the downside towards 31,711. The Nasdaq really is the one that's leading the charge in the US. So that's trying to break through some resistance levels here. We've got these previous swing highs from back in August, which we've cleared, pulled back into that level, held quite nicely, and posted a decent reversal on Wednesday. Yesterday, we posted further positive price action, trying to take out this resistance at 13,953. If we can get through that, then arguably we've got some sort of triple bottom in place here, and we're going to start moving towards the upside, targeting potentially 14,777. We've broken up through the downtrend. So if you are going to trade US markets or US stocks, you probably want to be centering your focus around tech stocks at the minute, because that is the sector that is outperforming, and we're clearly seeing that with the Nasdaq at the moment. Okay, there's the roundup for the markets. Let's take a look at the gun to the head challenge. This is where Steve and I pick trade ideas live on the stream. As if we had a gun to our head, we must have stops and targets on these ideas that we come up with. We must have risk reward ratios that are better than 2-to-1. The trade ideas are closed out at 9 p.m. unless the stops or the targets are reached in that time period. So yesterday I was trading Aussie dollar. Very speculative, because it was trading against the strength that we've seen of late in the US dollar. So I was hoping for a decent outcome, a speculative outcome, of course, but that wasn't to be the case. So here's the trade from yesterday. I was stopped out. We are trading these on a live account. It's only a small account, £2,000 that we started off with. And we can see that here on the Awanda Live tab. So we've linked up to our TradingView account. I got stopped out here for a loss of £19.85. That was 1% of my account, which yesterday was at £1,985. Today it's at £1,955. So I need to try and get this green, if I can, back above 2,000 before we return on Tuesday. So I need to try and find a trade idea this morning that's going to work for me to do that. While I was going through those charts there, the one that really stood out for me was gold, actually. And I'll show you why again, looking at the daily chart to start with. So we know prices are running into a pretty significant area here at 2070. We can arguably say that a short-term top has formed, potentially a double top. The double tops don't need to be exactly lined up, but we can see there was a move to the upside here on the 14th of April, and then another move to the upside on the 4th of May, both of which were rejected. Then we've got this horizontal support at 1969 and another one at 1952, both of which have been broken down. If we look at price action today, following yesterday's move to the downside, we can see that we are now retesting resistance there at 1952. So that could be a good area for me to consider getting short here in anticipation of further losses on gold. And that means we're probably going to see further strength on the US dollar. So let's take a look at the hourly just to see if we can shape something up here and get some decent risk reward on. So we can see here we've got some resistance at that level there. That's at 1984. Then we can see we've got some what was support, which should now act as resistance. This is a previous swing low from the 18th of May. We could also say maybe there is some resistance there at 1954. So we're retesting that today. Decent bounce back from those lows. Is this area here going to act as resistance? This band here. I'm suggesting yes, because we've got a decent looking top pattern forming on the daily chart. Let's turn that red because we expect it to be resistance. So I'm going to get this on. I might need to redo it in a second because I'm not sure I'm on the correct market to be able to trade this. I need to be doing it on Owanda. Okay, so got to draw this again. That's the area. So we're right into that zone at the moment. Let's get the risk reward on. If we sell it at the current levels, stop loss. Obviously, we've got this big impulsive candle here that formed around 1 o'clock in the afternoon yesterday. So I'd ideally like to go above that. That's at 1963.45. And now I need to be looking for a decent target on the downside. So we can see there's a bit of a range. So what I'm going to do quite simply is measure this range to give me an indicative area to take profit. So if you measure that range, project it lower, that comes down at 19.75, just around 2.8 R on that one. So let's get this on, trade, create new order. So hopefully I'm not going to struggle here because of the size of the account. So take profit level and stop. Take profit is at 19.19.7. Let's go round that up to 80. Stop loss at 19.63.45. Risk 1%. No, it's not going to let me do it, is it? Or is it? 1 unit on gold. How much risk is that? At 1%. 1. No, so I can only do round numbers there. So 2 units would be risk of £16.54. That's because I've got that on there. That's a bit silly. 1. Yeah, so the best I can do is 2 units. Would be risking £16.60. Risk reward is 3.3. Selling 2 units at market. That's on. Okay, so that's my trade of the day, selling gold. Let's see how that plays out. Let's have a look at the data then for the rest of the day. So we've got the US PCE prices index, which is due out at 1:30. We haven't got US jobless claims. That is a mistake. That was yesterday's data, so ignore that. Next week, we've got US jobs opening on the 31st of May. We've then got US ISM manufacturing on the 1st of June, and then non-farm payrolls on the 2nd of June. Also be aware we've got this bank holiday in the UK and the US on Monday, so there's going to be no stream from us. And obviously some markets will continue to be open, particularly cryptocurrencies, which will continue to trade throughout. So thank you very much for watching today. Hope you've all had a fantastic week. Have a great weekend. And Steve and I'll be back on Tuesday to run you through how markets are shaping up for the week ahead. Thanks for watching, everyone. Take care. Bye-bye.